Trading can be tough, and finding a strategy that's both simple and works across any market can be like striking gold. But today I'm excited to share with you a strategy I've discovered that's not only super easy to use, but will also make your trading experience way smoother. The key to this strategy is an awesome indicator called the imbalance algo. It's fantastic at spotting trends using the 50% Fibonacci level, which simplifies identifying potential trades. But before we jump in, you need to know that if you don't watch the entire tutorial, you won't be able to use it properly. Here's how it works when a candle closes above the 23.6% level. That's a sign you might have a long trade opportunity. If the price dips below the 58.6% level, it's time to think about a short trade. And here's the cool part, you can make things even easier by tweaking the indicator settings. Start by setting the strategy to manual, then crank up the sensitivity to 5. After that, turn off the show and fill options and get rid of the profit panel display. By doing this, you'll declutter your chart so you can focus on the strategy without distractions. Keep only the long and short signal options on and turn off everything else. This way, you're laser focused on what matters most. Now, we've got ourselves a super simple setup. It's a buy-sell indicator with green triangles for buys and red triangles for sells. When you're in a trending market, trading with this indicator can be incredibly profitable. But heads up, when the market starts moving sideways, you'll probably notice more false signals. Don't stress about that though, I've got a solution coming up. We're going to add another powerful indicator with custom settings that'll help you filter out those counter trend signals and keep you out of choppy markets. This indicator is like your secret weapon against misleading signals, keeping you on top of the trading game. Plus, it'll alert you when the market's ranging so you can avoid getting stuck in a sideways price trap. It's called the 10 and 1 moving averages indicator. Yeah, the name's a little long, but trust me, this thing will do wonders for your trading strategy. I'm going to walk you through how to set it up so you can make the most of it. Once you've added the indicator, let's focus on the input settings to configure 4 key moving averages. Here's how for the first one, set it to EMA 20. Next, adjust the second one to EMA 50. Then set the third to EMA 200. And for the fourth one, go with EMA 100. Now, here's a pro tip, set the time frame for these EMAs to 3 time frames higher than your chart's time frame. So if you're using a 15-minute chart, set the EMAs to 1 hour. You can also change their colors and styles to make them stand out more clearly on your chart. Now, this moving average setup is crucial for spotting trend direction. Here's how to read it when the 20 EMA is above the 50 EMA, the 50 is above the 200, and the 200 is above the 100 from the higher time frame. You're looking at an uptrend. Just make sure the price candles are also above all these lines to confirm the uptrend momentum. If it's the other way around, where the 100 EMA is above the 200 is above the 50, and the 50 is above the 20, you're probably in a downtrend. Again, make sure the price candles are trading below these lines for confirmation of the downtrend. Now, check out this example where the EMA way 100 from the higher time frame is completely flat. That's a clear sign of a sideways market. You can see the other moving averages and the price candles crossing above and below it repeatedly. When that happens, it's best to avoid trading because the market's too choppy and it becomes hard to predict which way it'll go. Now let's look at a chart with a strong uptrend. See how the candles stay above all the EMAs stacked in the right order. That's exactly what you want to see. But here's the key, don't enter trades if the candles dip below even one of the EMA lines. Wait until the candles climb back above all the moving averages in the correct order before considering any new trades. The same logic applies to downtrends, just look for the reverse order with the candles below all the EMAs. By following this process, you'll be able to steer clear of trading during uncertain market conditions and focus on higher probability opportunities. But before we dive into the next part, let's take a quick break. If you haven't subscribed to the Income Nomad channel yet, you're seriously missing out. We've already shared hundreds of profitable trading strategies, plus a free trading course from A to Z, and subscribing means you won't miss any future content. Plus, you can check out our full library of videos to boost your trading knowledge even more. So when you see the EMA 20 above the EMA 50, the 50 above the 200, and the 200 above the higher time frames EMA 100, look for a buy signal from the imbalance algo indicator. Make sure the signal candle's closing price is above all the moving averages before entering a trade. Once you've got that confirmation, you're good to go. For your stop loss, place it just below one of the moving average lines or slightly under the most recent swing low in the market. As for your target, a good rule is to aim for a reward that's 2 times your risk. But as I've mentioned in the beginning of the tutorial, you need to watch the entire video, because not only I'll show you how to gain way more than that, but also how to turn it into a fully automated bot with alerts. Now, when you spot a clear downtrend, confirm that the EMA 20 is below the EMA 50, the 50 is below the 200, and the 200 is below the higher time frames EMA 100. Make sure the candles are trading below all of these moving averages. Then keep an eye out for a sell signal from the imbalance algo indicator. Once you get that signal, check that the closing price of the candle is below all the moving averages before entering a sell trade. For your stop loss, place it just above one of the moving averages or slightly above the most recent swing high. Your target should be calculated by multiplying the distance between your stop loss and entry by 2 to get a favorable risk to reward ratio. Now let's see a part of 100 times of back and forward testing this bad boy following with the results. Well, the results speak for themselves. What else would you want? Since I'm a man of my word, herewith is my gift to you all who watched the entire tutorial. You can see 3 videos on your screen. On top is the feed levels with my customization combined with pure price action, which works well on any trading strategy. On the bottom left is how you can turn any trading strategy into a fully automated bot with alerts, all for free. And finally, on the bottom right is another fantastic strategy. If you think this one is not for you, that one is also going viral. And there you have it. Feel free to drop your ideas and questions down in the comments, because I'd love to talk all trading with you, my beloved friends. And thanks for watching, and may the charts be ever in your favor.